Thanks for tuning into the weekly. I'm Jessica Amir, a market analyst with Bell Direct. The Aussie share market's rocky path to recovery is progressing, but slow this week with the ASX 200 reversing 1.7% to Thursday, while US equities gained 0.7%. The key is that Aussie investors are questioning the expected economic recovery, but the state of Victoria re-entering lockdown. But take heed, although the market fell this week, it's just the fourth pullback across 16 weeks. And as we can see, the market is still up 31% from its COVID low and 17% away from its February peak. This week, investors chase returns in the tech sector, which gained 2.7% thanks to the rise in online COVID-19 shopping, while stocks sensitive to the economic recovery went south, with the real estate sector falling 5.6%. On the stock leaderboard, 5 gold stocks made the list. Perseus Mining, PSU out in front, up 15%, followed by St Barbara, SBM. Now, this was because the gold price rose to $1,816 US an ounce this week, its highest level since September 2011, with US COVID-19 cases rising, increasing demand for the safe haven. Locally, Melbourne entered lockdown for 6 weeks, restricting people from being allowed to leave their homes only for essential shopping, work, exercise or medical treatment. Now, this throws up the big question: how will this impact the economic recovery? We're thinking it will delay the recovery, causing a speed bump. Melbourne adds 20% to Australia's growth, so you could expect GDP to fall 0.25% this year. To help soften the bump, we expect the federal government will provide extra help to businesses affected so they can maintain cash flows, increase the number of job seeker and job keeper payments, and also allow further access to superannuation. This week, the RBA met and held rates at a record low of 0.25%, saying the economy is improving with some businesses rehiring staff. And with rates set to remain at record lows for some time, the hunt for high stakes continued. APT shares rose 9% to Thursday's 73.26 close, another record high. Notably, Morgan Stanley, one of the world's biggest investment banks, backed Afterpay for the first time. This week, APT announced sales grew 127% year on year, beating expectations. It doubled its customers to 9.9 million and increased US market share, gaining on US rival Klarna, while also holding down #1 rank here in Australia in the buy now, pay later segment. APT also announced a $800 million capital raise, which might help it enter new global markets and with acquisitions. Morgan Stanley reckons APT's eBay partnership will go global, and APT will also take market share from PayPal and credit cards. The dark blue line shows buy now, pay later use versus further room to grow. Now, Morgan Stanley gave APT a $101 target, but estimates 60%, or there's a 60% chance it could hit $242.80 if Canadian sales take off, US adoption progresses, and it expands into Asia. Probability of success in Asia is high, given the tech giant Tencent owns 5% of Afterpay, and Tencent wants to offer more payment options to its gaming and WeChat customers. Now, turning to strategy, putting the spotlight on the healthcare sector, COVID-19 has shifted the focus onto companies trying to develop treatments, vaccines, or diagnostic tests for the virus. Bell Potter expects companies that deliver solid, clear data and commercial outcomes for next year, FY21, they'll be rewarded for their efforts with share price appreciation, new investors and new business partners. Secondly, consider the all-important employment data is out next week. Now, the RBA expects the unemployment rate will rise from 7.1 to 10% in June. But keep an eye out on consensus due out early next week. If unemployment is lower than the market expects, the ASX 200 banking and consumer stocks should rally. If unemployment is higher than expected, the market may come under pressure. Now, ending on trading ideas. Firstly, consider this week that CSL, the biggest company in Australia, saw its biggest decline since COVID-19, falling 6% to $280.75. UBS estimates plasma centre donations will fall 20% from April to September amid the rise of COVID-19, particularly in Texas, Florida and Arizona, which account for 20% of CSL's plasma centres. UBS expects a recovery though, given citizens get paid to donate blood plasma in the US. UBS reiterated CSL's a buy but dropped its price target to $3.31. Another UBS buy is disinfectant company Nanosonics NAN. Citi likes Thematic Healthcare SHL with a $34 target, and Bell Potter's preferred biotech companies are Oncosil Medical and Volpara Health Technology, which will benefit from their outstanding management and patents. On behalf of everyone here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. We'll see you next week.